Good morning. Today we're going to be looking at this past paper example of bank reconciliation. You need to understand what the bank reconciliation is. We are simply reconciling our balance in the creditor's ledger with the balance that is in the statement received from the creditor. You need to remember that from our eyes, from our perspective, the creditor is a liability. So whenever we purchase goods on credit, we are going to credit the account because any liability will increase on the credit side. So whenever we make a payment, we are going to debit the creditor's account by the payment. All the discounts that we receive, we are going to credit the creator's account. We're actually going to debit the creator's account because that reduces what we owe them. Any payments will also be debited to that creator's account because it decreases on the debit side. Whenever we buy on credit, it will increase on the credit side. And obviously, you're going to add that to the balance. And everything that is on the debit side will be subtracted. However, from the creditor's perspective, we are debtors. Do you see? From our perspective, they are our creditors. So whenever we buy on credit, we credit their respective account in the creditor's ledger. But from their eyes, we are debtors. So whenever we buy from them on credit, they debit account. We credit, they debit. We debit, they credit. So in essence, when we make a payment, they credit our account. But when we make a payment in the creditor's ledger, we debit their account. Now, the two balances might be different because of mistakes done by us as the business in the creditor's ledger, or the mistakes that were done by the creditor in their debtor's ledger. Obviously, in the debtor's ledger, it will be our name. Now, mistakes that are done by the creditor, and this is us correcting the mistakes after receiving the creditor's statement. Remember, creditor statements, it's simply a statement of account that we receive from the creditor that breaks down all the transactions we have had with the creditor. Now, after receiving that, we're going to compare that statement of account with the creditor's ledger. And if there are any differences, this is how we deal with the differences now. If the mistake was made by us as the business, then that mistake will be corrected in that respective creditor's ledger. I repeat, if the mistake was done by us, we will correct it in the creditor's ledger. However, if the mistake was done by the creditor, we can't call or email the creditor to tell them that to correct this and this every time after we notice that there's a mistake that they made. Instead, we are going to prepare what is called a creditor's reconciliation statement. So we're going to prepare the creditor's reconciliation statement with all the mistakes that were done by the creditor, and then we will send it to them as a whole. I repeat, mistakes done by the creditor, creditor's reconciliation. Mistakes done by the business, creditor's ledger. Remember, when we do our comparison, we are comparing the credit side of our creditor's ledger to the debit side of the statement that we received from the creditor. Let's do that. Now, Mohludi Traders buys goods on credit from Pico suppliers. Pico suppliers know that these are our creditors. The business received a statement for April 2016 from the creditor. Okay, so we received the statement from them, but they started with the creditor's ledger of Mohludi Traders, which is us. So we prepare the creditor's ledger, and the name of the creditor is Pico Suppliers. So at the beginning of the month, we were owing Pico Suppliers 44,220. And then we purchased more goods from them. So whenever we buy, we are going to credit their account. I think that is a summary. Everything that is on the credit side here, it's a plus, so we're going to add it to the balance. So you shouldn't be surprised as to why we have 98,210. That is because obviously we purchase. So when we buy, it will be credited. The balance that we owe them will go up. So we're simply going to compare all these transactions to the statement that we received from the creditor. Let's do that quickly, okay? And I just want you to take a look at the statement received from the creditor. Note that transactions that appear in the statement received from the creditor but do not appear in our creditors ledger, we are going to indicate them with a cross, a red cross, and the ones that appear in both, you are going to tick them, or the ones that are correct in that specific statement, we are going to tick it. Okay, if it's incorrect in the other statement, we are going to cross it, red cross it. Basically, it's a green tick if it's correct, and it's a red cross if it is incorrect. Now you'll realize here, when we buy on credit, we bought for 54,000 and they also have 54,000 here. So since it appears in both statements and it appears on opposite sides, we are going to take that 54,000 because it simply indicates that it is indeed correct. Now we've got a check of 111449, which is for 22,500. Let's check if we have it on the other side. Let us look at the statement received from a creditor. There it is. So we're going to take it. And we're going to take it in our creditor's ledger as well. And then we have a debit note of, debit note, remember, it's a document that we issue to the creditor when we return goods to them. In return, they are going to give us a credit note. So let's check the dates there. It's the 12th, the debit note is 746. Obviously, in the books, it will be written as a credit note. Let's check what happens there. You'll realize after the payment, we got a discount of which we didn't record in our creditor's ledger. So I'm simply going to cross that out. It is correct, by the way, here. I'm crossing it out because I just want to get an indication that this still needs to be recorded in my creditor's ledger. Know that when I record it in my creditor's ledger, I'm going to debit it because it reduces what I owe the creditor. Discount received reduces what I owe to the creditor in my creditor's ledger. Okay, I say it's correct here. I'm just putting a cross so that I don't forget. Okay, but here is what we were talking about on the 12th. Look at the discount. Oh, again, I realized that we were charged interest on the 5th. Obviously, we couldn't know that until we receive a statement from the creditor. So that will also be added to our creditors control. It will be on the credit side, so it will be added because it means we owe the creditor more. So when we owe the creditor more, it will be added to the balance. If we owe the creditor less, it will be subtracted from the balance. The same as that for 8, we are going to subtract it from our creditors ledger balance. You take the closing balance and then that's the one that we're going to correct. So remember, we are working from these balances here. Don't forget that we are working from these balances. So in each, when we make our corrections, we are going to start with these balances. All right, moving right along. Obviously, this 6570 is different because in our books we have 5750. Here they have 6570. Okay, in our books we have 5750. Okay, if I'm not mistaken, it is 5716. There it is. Okay, so there it is. So these amounts are different. So we don't know at the moment between the creditor and us who is wrong. We'll get that from reading additional information. Okay, moving right along, let's go back to the creditors statement. In this case, they say that they sold goods to us for 91,500. That should be on the credit side of the creditor's ledger. Let's check if it is there. If it is there, we are going to take it. But you realize that before that 91,500, there's an invoice of 27,300, which is in the creditor's ledger, but it's not in the creditor's statement. Okay, that is highly unlikely that this mistake was made by the creditor, but it's possible. I'm not saying it's not impossible, it's possible. I'm gonna take that 91,500, and then I've got invoice 273 on the 21st of 20,215. Let's check what we have in our statement. In our statement, before that invoice, we've got a receipt of 84,000. Now, if the creditor received 84,000, it means we as the business paid it. So it was supposed to have been on the debit side of our creditor's ledger. So it's not on the debit side. And it's highly unlikely that we will omit such a thing unless there's fraud going on. If our bookkeeper is just stealing money, there's no 84,000. We only have that 20,000, the 215 on the 24th, okay? And then there is 50,250 on the 21st. Basically, this 50,250 and that 20,250 actually refer to the same transaction on the 21st, and it's invoice 273. So one of us, between the creditor and us, someone is wrong. So basically, I'm simply going to cross it, okay? I'm going to cross it. And then we've got a credit note on the 24th, which is 632 of 5,400. A credit note, it is recorded correctly because it's supposed to reduce what we owe the creditor. Okay, remember, credit here means it is going down. Debit means we are buying from them, so it will go up. So when we return goods to them, they will credit our account. But let's see if we did, in this case, we were supposed to debit, but look at what we did. We credited, okay? When we return goes to the creditor, remember what I've said, it's a minus, so it will reduce what we owe the creditor, but instead we increased it. So here it's obvious that we are the ones that made a mistake, because you can't have a debit note on the credit side, because a debit note means you're returning goods. So whatever you owe the creditor must go down. In this case, we're increasing it more. And then there's a general voucher, and I just want you to take a look at what's happening here. We received the statement on the 25th, all right, and obviously the last transaction will be on the 24th. So everything that is on the creditor's ledger after the 25th will not be there in the statement. So we are going to cross those ones out because they need to go to the statement. So this must go to the statement, this must go to the statement, this must go to the statement. And the fact that it must go to the statement, it simply tells you that we need to take them to creditors reconciliation statement. Now that I've made all my corrections, so remember, now I need to make sure that everything is recorded correctly. And then I'm just going to read additional information here. They say the discount of 450 received from Pico suppliers on the 10th was omitted erroneously in the books of Manchu. So we omitted it. It was received, but we omitted it. So we're going to go to our creditors ledger and subtract that 480 because we erroneously omitted it. And then they say invoice 111 was reflected erroneously in the account of Pico suppliers in the creditors ledger of Manchu traders. It refers to merchandise purchased from another supplier. So we incorrectly credited Pico suppliers, so we don't owe them that amount. So we need to go to our creditors ledger and subtract that amount. Okay, let me see, it's invoice 111. So that invoice 111, it means we bought on credit. So this is 27,300. So we need to go to Manchu's traders, and then in our books, because we are Manchu, we're gonna go to Pico suppliers and subtract that 27,300 from our creditors ledger, from that 116,400. Okay. And then they said Pico suppliers made an error in the recording of invoice 273 on the statement. Let us look at that invoice. So they made an error. So if they made an error, it simply means that it must be corrected in the recon. So it's with reference to 273. So they recorded our invoice as 50,250, which is a mistake on their side. So the difference, it means that they say we owe them more. In reality, we actually owe them 20,000 250. So we owe them 20,250. So in our books, this is correct. It must be corrected by them. And the difference there will be 30,000. So in their books, when we prepare the creditors reconciliation, we need to subtract 30,000 so that we can bring that 50,000 down to 20,250, because at the moment the training we owe them 50,250, or else we only bought for 20,250. Then they said goods returned on the 12th are recorded correctly in the statement from people suppliers. The entry in the books of March is incorrect. I think it's that invoice that I spoke about on the 12th, where they recorded it as 6,570, or else we have 5,715. In this scenario, please note that according to this, let me just read again to check who is correct. Is it us or is it them? All right. So we've got debit note of 5760 and they have a credit note of 6570. Now let me just read this to check who is right. It was recorded correctly in the statement, so we are wrong. It means that we need to reduce our creditors ledger by the difference. Now let's check the difference. So you're taking 6570, you simply minus 5760. Let's check how much the difference is. It's 6570, 6570 minus 5760, and that gives us a difference of 810. Because it is a debit note, it means we need to subtract an extra 810 from our creditors ledger, from the balance in our creditors ledger, because the mistake was made by us, not them. Okay, I've actually explained that. And then we have receipt 654 was shown erroneously in the statement from Pico. So Pico made a mistake. This transaction does not relate to us. So it'll have been nice because that is a payment. I think it is that payment of 84,000 Rand. That 84,000 Rand is not in our book. So they need to correct it, and we are going to they have to add 84,000 to our account. So we're going to prepare creditors reconciliation statement and add it back. So we're going to add back that 84,000 Rand. And then they said people suppliers purchase goods on credit from Machu, referred to a general voucher 490. Machu Traders has transferred a debit balance from the creditors ledger. So these guys, we buy from them, they buy from us. From our perspective, they are debtors when they buy from us. So we take the amount that they bought from us, we're going to use it to reduce what we owe them. Therefore, it will go to the creditors ledger and we are going to subtract it. Hence, we have the general voucher. In this case, obviously, it will be the general voucher for 3,600. But the problem is that they do not know that we took what they owe us and we used it to reduce what we owe them. Therefore, that is why we need to record it in the recon, because they don't know. They have not recorded it yet. So they need to record it by reducing our account by that 3,600, because it means they no longer owe us. So it's a trade-off sort of. Okay, so basically you owe me, rather reduce what I owe you. So that's what they're supposed to have done, and that's what we have done. And then obviously the transactions that come thereafter must all go to the recon. So because they're all on the debit side, it means that they will all be subtracted from the balance we have from the statement received. Okay, now let's go straight to the questions quickly. Now in the questions, basically the first question simply asks you, why do we prepare creditors reconciliation statement? The first reason I can come up with is that it serves as an internal control measure. Remember, a person that prepares the creditors ledger and the creditors general cannot be responsible for preparing the creditors statement or the creditors reconciliation statement. This is because we want to use it as an internal control measure. So someone senior must actually prepare this. That is for us to detect fraud. You remember the 4,000 Rand that we trimmed, was it 84,000 rand? No, it wasn't 84,000 rand. I forgot which amount it was. Yes, it was the 27,000 something, where we assumed that we bought goods from them and we didn't. We could have paid that amount to that person only to find that it is a relative of the bookkeeper. So because we found that mistake, we corrected it so the payment will not go to the wrong person. Okay. And then we have this, it ensures that correct payments are made. So remember at the beginning, we received the statement that said we owe 480. To avoid such things, it's important to prepare the recon to make sure that we pay on time, because if you don't pay on time, you get charged interest. And if you pay on time, you get discounts. Another thing is to rectify the differences. As I've said, the differences will be rectified by comparing the two statements. Okay, so in our books, you start with the balance that was in the creditors ledger, which is 600. It's actually 116,400. So we're gonna start with that balance and start adjusting it. I'm gonna first start by adjusting. I'm not gonna explain everything. The 780 was the interest, remember, so we're gonna add it, and then we're gonna subtract 27,300 because it didn't relate to the creditor Pico suppliers. We're gonna subtract the 480. This was the discount that they explained it, that we didn't record, and then we're gonna subtract another 810. This is the difference of goods returned. We recorded goods returned as 5,750, while the creditor said the goods returned were worth 6,570. So the difference will be this 810. And then we're gonna subtract this 10,800. This is a debit note that we erroneously credited when we were supposed to debit it because we returned goods. So we're gonna debit it twice. When we debit it twice, it reduces what we owe the creditor, and that will give us our final balance. And our final balance will be 77,719. And now let's go to the statement. We start with the balance that was reflected in the statement, which is 121,800. Is that correct? Yes, 121,800. And then I'm just gonna adjust it according to the mistakes that I realize. In this case, we're going to take invoice 273. We're going to subtract 30,000. Remember, they said we bought from them for 50,250 when we actually bought for 20,500 and 250. So the difference must decrease what we owe them in their statement by 30,000. And then there was a receipt of 84,000, of which doesn't relate to us. We didn't make that payment. Therefore, we have to get it back because we actually did not make that payment. And then we have transactions that happened after the statement was received. All of them were on the debit side, and that's why we are simply subtracting them. So they need to be subtracted, and hence we have a new balance, and our new balance will be 77,790, which is what is supposed to be these two, the statement and the creditors ledger's balance must always be the same. So we have reconcile. That's what reconciliation means. We reconcile, we harmonize the two accounts and make them the same, right? And then it says here, the owner, multi-trader, says not completely satisfied with the service and the quality of goods received for previous suppliers, such as two factors he should consider. First of all is the distance, okay? And then you must also check the prices, compare the prices between the current supplier and the new supplier that you are planning to go to. The quality, remember, even if the new supplier is cheaper, it might be cheaper, they might be cheaper because they supply low quality goods. So that's what you need to consider as well. Payment terms and discount offered. Now we want, which is very tricky, we want a supplier that is close so that we don't spend too much on transport. And then obviously when we spend too much on transport, it means that our products are going to be more expensive because we're going to include transportation costs, right? We need to make sure the prices are low. But now most of the time, people that provide good quality goods, they sell them at a higher price. And then obviously quality must be compared as well. And we also want a supplier that will enable us to pay at least after 90 days so that we have time to collect money from suppliers and simply use that money to pay our suppliers. And when you pay them within 90 days, you must give us a discount. That's what you normally fight for, okay? And that is it with respect to this question. I hope it was explained thoroughly. If there's anything you don't understand, remember to rewind and replay it over and over again until you get it right.